So I'm going to read something. Then I'm going to tell you why I'm reading it. So here's my executive summary. The evening summary reported a VIX of 31.15. VIX is elevated. It's heightened due to Middle East tensions impacting oil. Overnight, the Nikkei 225 fell 1.8% due to tech sector weakness, while the FTSE 100 opened down 0.4% amid global risk-off sentiment. The VIX rose to 32, signaling increased volatility expectations above the 30-day average of 28. Brent crude surged 3.2% overnight to 84.50, amplifying the evening's oil supply concerns. X sentiment showed bearish chatter on the QQQ and NASDAQ, driven by tech earnings fears and bullish mentions of XLE and USO. Today's US CPI released is a key focus, potentially driving significant moves in SPY, the USD, Japanese yen, and bonds. Geopolitical risk and overnight developments suggest elevated downside risks for equities and upside potential for commodities. And then in a report here that I have, hold on, I will share that with you. Let's see if I can do that. That's not it, but I'm looking at it backwards. Hold on. This is all going to make sense here in a second, so you just have to be patient with me. And yeah, because I was looking at it backwards. There we go. So this is what I wanted to show you. This is the report. And what this is a ranking of overnight developments, and a ranking by those equities that may experience, or those asset types, not equities, those asset types that might experience a potential for a large move today and into the next few days, maybe the next 2 weeks. And the potential is right here. It's ranked by potential, probability of a move greater than 2 standard deviations. Equities at 17%, commodities at 15%. This equity at the S&P 500, and this one, the NASDAQ, currencies, etc. Right? So why am I showing you all this? And it's also telling me, how I would play these. All right. So that's what I wanted to show you. Back to the big head. So this is a report that I get every single morning. It's actually a series of reports, of continuous reports that I get that accumulate all the previous 2 weeks of market data with a macro analysis, and then this morning what happened overnight since the European Open. And this gives me directive on how I should play my tail risk strategies. And that's really what the title that you saw was all about. And it's also going to lead up to something that I'm going to introduce by the end of the week. And that is this tail risk strategy. Very similar to Universe's fund strategy, their methodology, or other tail risk strategies that you've seen from people from like Bill Ackman and others. And this is all going to be embodied in a service. And I'm not going to tell you what that is right now. I'm going to leave you hanging. But what I will say is that you can think of this as insurance on your account. You could also look at it as a way of getting into a very, very small account and grow that to 500 to 1,000%, maybe even 2,000% bigger in the next year. So yeah, I would want you to hang on and stay tuned for that, because that's going to all be coming. I'll be talking about it in bits and drabs each day. And then at the end of the week, we will reveal exactly what this is. This is a strategy that I've been following for many years, something that I used, originally started to explore this maybe 18 years ago with one of my mentors. And this is where I got into very heavily from an institutional point of view into this extreme asymmetry and tail risk strategies. So anyways, this is a fantastic strategy. Virtually any retail trader will be able to get into it. It is going to be fully supported by the most advanced AI. So you're not going to have to do any of the heavy lifting. It's just going to hand it to you and say, hey, this is what it is. Here's how to do it. Take it from there. All right, so now we're going to get back into the 0DTE morning market analysis. As always, it is also an asymmetric strategy. I hope you see the theme here. And volatility is up this morning because of all the things that I talked about earlier. You see it all folds together. And we are now back into what I would call the chaos zone, exiting the Goldilocks zone. So why don't we start by going back to the charts. That's not the chart. This is. And that's not the chart that I want to show, but I will get to it. Oh, well, we can start here. We can see that we tried like hell last week to break through this volume well area of low liquidity into this line of demarcation that I pointed out last week at 55.10, but failed miserably and have fallen back into this lower volume node. You can see the top of it is right here at, looks like at 53.75. So that's our new line of demarcation. However, it looks like we keep on slipping down. It's like we make some advancement and come back. And I don't know how long we'll be here, but that's really the game. If we drop below this level here, which I have not yet marked up, which I should, I'm going to put this at right at this crevice right here. We'll call it 51.75, and even below there, I would say that the ultimate level is around just above 5,000, and then after that things get really hairy. So as long as we hold that, I think we're going to be doing well. I mean, you can see that we dipped down into that area very briefly, but shot out of it like bat out of hell. With a good 5% move. This could be just a correction in that correction, or this could just be a dead cat bounce, for all I know. We don't know. However, that's what the thing that I'm going to be talking about later this week will help us analyze and prepare for. In any event, I can say that we're going to be experiencing a lot of volatility in the near future and potentially all the way through the rest of this year and maybe even next year. So buckle up, bucko. All right, now we'll go to the VIX, and you can see that we have risen up. Now we're above the Goldilocks zone, which I define the line between chaos and Goldilocks at about 32 on the VIX. We're at 32.56. That means that for our out-of-the-money butterflies, we're going super wide, 45 to 65 wide. I don't have a report for you on the big-ass fly this morning. I would suspect that if we're going to be experiencing a lot of volatility today, which I do expect, that the big-ass fly is going to be a difficult trade for us. Last week it was fantastic as we were trying to butt up against that 53.10 area, as it provided some level of consolidation, and so the big-ass fly worked out fantastic. But now we've been rejected and volatility is starting to pick up again. So that's going to be a difficult trade to put on. However, what it does mean is that our classic out of the money flies, super wide, way out of the money, is going to be a good option. And in particular, the Batman. The Batman is where we put a out of the money fly both above and below the market. So we have a call fly and a put fly. And so we push them way, way out. We make them very large. So they don't really cost us that much, but the potential for a profit is immense. What I mean by that is not from a a win rate point of view, but from a return on capital point of view. So we'll be taking small risk to make huge capital. And if it pays off, then you're going to be very, very happy. If it doesn't, it's not so bad. You just go on to the next day. And that's kind of the essence of the other strategy that I started this segment off with, all about tail risk hedging. And we're going to see how to take advantage of that in a super califragilistic, expialidocious way. I never planned on saying that. So anyways, our bias is no longer bullish. It is now bearish. So we'll have to change that to bearish. But with the big ass, with the Batman, that doesn't make so much of a difference unless you decide to go for a single out of the money fly. And then here's our lines of support. There's one at 52.35. So we're essentially, and also up here at 52.88. Let's see what we have down below here. This is the bottom of the node. So there's a distinct possibility that we could drop below this. So we'll see what happens. Here's the top of the node. As you can see, I've marked that up right here. And let's just bring this down to show you the bottom of the node. Bottom of node. I have to give it the right bottom. Of node. There we go. So this is probably where we're going to hang out maybe today. I don't know. But I'm looking for, if you're looking for an out of the money, a single play, you're going to be looking for something like maybe a pull up into this area and then down. Or up here even. I mean, if we get a morning rally, it could be something like this. All right. So that's how we would play our single out of the money play. Otherwise, we're waiting for morning volatility to sort of get out of the way, and then we'll put on the big ass fly, put one above and one below. So there you go. There's back to the big head. All right, there's our 0DTE morning market analysis, looking at our daily attempt to try to collect premium and market direction and volatility. As I said, I will be talking about our tail risk strategies going forward, and I think you're going to be very interested in this. This is going to be a strategy that's going to be accessible to anybody, from a very, very tiny account as low as $1,500 with minimal risk to really the sky's the limit in terms of where it can go. All right. That's all I've got to say, friends. Thank you all very much. This is Coach Ernie, and I am out.